Good day, everyone. My name is Anthony Phillips Njoku, and I'm a digital trader with 12 years of experience. Today is about the market forecast for the time period of March 27th, 2023 to March 31st, 2023. So if this is your first time to be on this market forecast, how we handle this is we're going to go through different market in this forex pair and crypto pair. This is just our own bias. We're not saying that the market will go to this direction 100% because we don't drive the market. What drives the market is demand and supply by traders, but we have our own bias. So we also give you fundamental breakdown. Fundamental breakdown has to do with the whole economy, microeconomy of the world, what is happening in different parts of the world, and how this event will affect the market and the prices of products and services. So let's dive into it. We will start with DXY. DXY signifies dollar. DXY signifies the strength of dollar. If DXY is going down, just like this, DXY is going down, dollar is weak. If DXY is coming up, dollar is strong. So as we can see, last week, dollar came into this what? Supply zone or demand zone. Is a demand zone for dollar, where dollar went very, very low in price. People started demanding for it because it is now what low in price, and if they buy, they can have high quantity of dollar as well. So dollar went there, spiked into there, and started moving up. So as the week ended, it made the dollar what strong. But if you can see, we still have more liquidity lying below here that needs to go and fulfill efficiency. Like the H4 validation point was never fulfilled. So diving into this week, we still expect dollar to be weak and to push the market down, fulfill this efficiency. And we have a daily validation point that has not even fulfilled efficiency over here. And also at that daily validation point, you can see that we have also a H4 validation point as well. So we expect market to drop down, diving into this week, drop down to this place. It needs to break this low and drop down to 101.100 mark for dollar before we can now expect the next moves. So if dollar is going to be weak, we expect Euro USD, one of the major currencies we trade and the most popular currency in the forex market. We expect Euro USD to go up. So what I expected is a pullback or corrective structure. As you can see, market came and fulfilled efficiency. We had what? We had a H4 validation point over here. This is the H4 validation point. Once the market went there, swept liquidity and started going up. So we'll be expecting, we'll be waiting for our buy setups, our buy structure. As soon as we get our buy structure, we can see we have what? H4 validation point up here. We have a H4 validation point that has not fulfilled efficiency. And over here, we also have a daily validation point. So we're expecting market to what? Extend its move, a pullback or a corrective structure over here. So this is more of an impulsive move. But if this impulsive move is withheld within this zone, yeah, we have a supply zone at this area, then it's going to turn out to be a corrective structure. So, but for now, my bias is for the buy. You can see this market came here and fulfilled the efficiency over here. This is the H4 validation point, fulfilled the efficiency with this week and started dropping. And over here, it came here and now fulfilled efficiency over here. So we'll be waiting for more buy setups as the market opens up. Together with the fundamentals on Monday, we have a fundamental on Monday that also encourage Euro to push the market to the upside. So there we'll be expecting more push, and we have H4 validation points over here that needs to fulfill efficiency, and also a day one validation point and also needs to fulfill efficiency. That is liquidity as well. Then we now, when it gets here, we now start waiting for looking for the next reaction. The next on our list is AUD/USD. AUD/USD is clear. It's clear. It's 100% clear. The structure is clear. So let's look closely what AUD/USD did here. These are validation points. Okay, so on AUD/USD, over here is the last red candle. This week came here for full efficiency on this last red candle, and you can see it's close to the one validation point as well. And then this is the last red candle where the market went up to break this high and break this high. So there is what H4 market structure break at this high, which came back into this red candle to fulfill efficiency, which is here and also here. So yeah, this red candle produced another candle that broke this high, and this high is H4 validation point that was market structure break that was over here, H4. So this is the candle that produced this high that broke this. So now market has come back into this what validation point and also what demand level that broke this what high, which is here. So from here now, we'll be going down to smaller time frames to look for our entry structures. We're going down to smaller time frames to look for our entry structures for the buy on AUD/USD. At that point, at this point, we're looking for our buy structure at smaller time frames, and when the structure plays out, I'll be sending out the signals. I'm taking to the upside. We have this day one validation point that has not fulfilled efficiency. Over here, we saw what a H4 validation point, and this validation point was derived from the move of market structure break within this zone. That's why this sell happened. But before this sell occurred, there was what a stop hunt by the market makers. They stop hunt some traders, but our stop loss was on this high of this candle. So we made the profit moving down on AUD/USD before the week closed out. So diving into next week, we're expecting dollar to be weak, and then we'll be buying the AUD/USD. So these are for the two major currency pairs I trade. I have forecast for the rest, but due to I don't trade them much often compared to AUD and Euro. This for NZD/USD. You see, we already have the validation point marked out. The market has not fulfilled efficiency yet. So if it fulfills efficiency, then we have 100% guarantee for a buy setup, MSB, RUTU. Then we take our buy up to this H4 validation point, which is over here, which is also acting as what supply level as well, that dropped the market to the downside. So that's for NZD/USD. Then GBP/USD is a bit complicated. It is a bit complicated. GBP/USD, my bias is mainly we have more push to the upside because this is more like an expanding flat. This is more like an expanding flat. This for GBP/USD. So if this is the accurate expanding flat that I am meant to see on GBP/USD, let me adjust this properly. If this is the expanding flat I expect to get on GBP/USD, I expect market to start moving, pushing up from here. This market, and head to this day one validation point. This is the expanding flat on GP. You can see over here, market has not fulfilled this efficiency, and there is a H4 validation point up there as well. So the day one validation point also meets with the H4 validation point, which is a good point for a reversal. But with the confluence of the day one validation point and the H4 validation point, we'll be looking for our buy setups. If this is an expanding flat, this could extend much further. It could extend much further than what I'm seeing currently. It could extend much further. But for now, this is what I'm heading to. I'm heading to that day one validation point and also H1 validation point where the expanding flat has high liquidity to push the market to. So that is currently what I see on GBP/USD, because the trend has totally changed. I can remember when we created a bias from here. Yeah, we expect the market to drop from here down to this target, but it totally broke that downtrend line, created a retest on it, and then started pushing more up to the upside on GBUSD. Why for gold? Well, gold has a very complex structure, to be honest. It has a very complex structure. And why I say that is very complex structure is because last week market was at this point. It started off the week at this low, pushed the market up, came back down, pushed the market more up, and broke the $2,000 mark. Then after that, it pushed down again and pushed up again. So this is a little bit complex. And due to I expect dollar to be weak, which we're meant to say, okay, yeah, we expect gold to move to the upside as well. What I've been looking out for is for gold to drop down more at this point. And if there's any reaction I see at this point, there could be some consolidation. For me, totally, I'll stay away from gold because my experience with gold so far has not been a very good experience. Why I say it's not been a very good experience is because I'm still studying the pair. I'm still studying how to analyze it. I'm still studying how to apply proper risk management on the pair, and I'm still studying how to make good profits from this pair. So that is what I'm advising anyone, that if you really want to start trading a particular pair to make money from it, you can make all the millions you want from one single pair. You just need to understand it, understand the language, understand the way the candlestick function, and you milk the market all the time. So for me, I'm staying away from gold, but this is what I see from gold starting up Monday. More push the downside into this point, and then a push up. So for US oil, I can remember I told you guys we were on this massive range. I can remember we were on this massive range. This was the high of the range, and this was the low of the range. And I told you guys, whenever a range is broken, we need to take the calculation of the range from high to low and place it over here. And this is our target. We got 56.75 dollars per barrel. To be honest with you, this is an index. US oil is an index. It has to do with a collection of companies, not one, not two, not three, not four, about 10 to 20 companies that produce oil. They buy crude oil and refine it and then sell on their gas stations, sell byproducts of crude oil like oil, gasoline, and so on and so forth. So when they put these prices and collect this data from different fuel stations and companies and so on and so forth, they now put it together, merge it together, and come out with one significant figure. That is what you see on the US oil chart, and it is a CFD, contract of difference. Okay, so as a trader, you're meant to know this, that what you're trading is not just it is just a derived contract of difference for oil price. So currently, I see oil at this mark. It broke out. Last week, it broke out. But I wasn't able to cover this breakout because of last week. We weren't able to cover up our market forecast for last week Sunday. But this Sunday, this breakout occurred. And after this breakout, there was a retest. After this retest, the market dropped down again. So my total bias for oil is sell, and my 100% major target is what, this 56.75. But for current levels, market is what, at this H4 validation point, you can see that I marked it out. We're waiting for reactions on the smaller time frame for MSB and UTU at this point as market opens up, and we're expecting more drop. We're expecting more drop. Do you understand? So that is what I expect on US oil, more drop to the downside. So the next is Bitcoin. So currently, Bitcoin has this expanding flat, and I want to explain something to you. The market makers have their fingerprints on this chart. Currently, last week I had this M15 market structure break. I'm sorry, H4 market structure break. I saw market come back into this origin over here, and I set an alert over there, but it never came back to it. Instead, the market opened up for the Monday market and started pushing up. So if you look closely, we have liquidity line here, liquidity line here. Market came up and spiked to the downside, taking out this liquidity over here, taking out liquidity over here, taking out liquidity over here with this red candle and started pushing up again. The same move we saw in gold. So now market came back and retested this particular point, which is close to the 27,000 mark. And then it had some little when the weekend comes in, there's a little drop in volume in crypto market. So it started playing a little bit of game in between 27,000 mark and the 25,000 mark towards the weekend. I monitored it Friday, Saturday, 27 and 25,000. Sorry, 27,000 and 27,500 mark. So this Sunday, the market was pushed up with high volume. There was high volume in the market today and pushed up and entered into the threshold of the 28,000 mark. My overall bias for Bitcoin is buy. My overall bias for Bitcoin is buy. And we're heading much higher. We're heading much higher for Bitcoin into the this current zone. There is a zone here. The last green candle before this massive drop. The last green candle before this massive drop in the market. There was a massive drop in the market for me. So the last green candle, I marked it out, and that should be around the $30,000 mark. So I'm not surprised if I go to bed today and wake up tomorrow and I see Bitcoin 30,000. I'm not surprised. So my overall bias still is that Bitcoin is going to the upside. And due to all the macroeconomy that is going on in the United States with the Silicon Valley Bank and Credit Suisse and so on and so forth, people are just running towards people's money, and people's money is what Bitcoin. People are also running to God's money. What is God's money? Gold. To be honest with you, I'm going to break down something very, very deep for you today, and I don't know if you've ever heard it from any other place. We have the Asian banking system that pegged money to gold. Every economy is meant to print out money they had according to the money, print out money according to the gold they have in their reserve. But as at 1970, they removed the dollar from the gold standard. So after they removed the dollar from the gold standard, the whole economy started operating on what they call fractional banking system. The whole world started operating on fractional banking system. And to be honest with you, fractional banking system is a system whereby if you deposit 100,000 naira into your bank account, half of that money, which is 50,000 naira, is going to be used by the bank to loan to people. If they loan to people, they take interest on those loans. And currently, Nigerian banking system was announced that we take 18% loan on any amounts taken by the public from the bank. 18% is what you're going to pay. So if you're taking 1 million, you're not paying back 1 million, paying 1,180,000 naira. That's what you're paying back to the bank. And then they also take some percentage of that, your 100,000 naira you deposited into the account, and what do some transactions, investments. Banks, they invest in other things with your money. Why they leave only 50,000 naira in their account? They're going to take 50,000 naira, split it into two, loan 25,000 naira, and use 25,000 naira for investment. The remaining 50,000 naira will be left in their bank account. They do this for every single individual that opens up an account with them. That's the fractional banking system. So at a certain point, when people lose confidence in the bank and say, bank, I want my 100,000 naira bank, and the bank has a certain limit they can give out in cash, that's where they start liquidating and going bankrupt, when they don't have enough money to pay back. And secondly, if their assets cannot be able to pay back the debt they owe, that's where a bank goes bankrupt. I've experienced it in a game before, so I know what bankruptcy feels like. You grab. So at this particular point, this fractional banking system has advantages and disadvantages. You as an individual, you should also know how to use this to your own benefit as well. Okay. So what I'm just advising you today is that we have God's money, which is gold, silver, platinum. We have the people's money, which is cryptocurrency. Diversify your portfolio. Don't put all your eggs in one basket. And from a book I read, Fake Money, Fake Assets, Fake Teachers by Robert Kiyosaki, is going to break down for you how you're meant to diversify your liquid cash into different types of money and make proper investments with this money. Okay, so talking about that, we have S&P 500, which has to do with the top 500 companies in the United States of America. And as of last week, the market closed bullish for the S&P 500. So diving into this week, I expect what? A little correction on a smaller time frame. There is this stage of validation point at this place where the market fulfilled efficiency swiftly. So I'll be diving down into smaller time frame. I expect what I marked out this zone already. When the market comes into here, we're going for a more buy and taking the market at this next high. Okay, so that is it for the top 500 companies in the United States of America. And that is the last pair for today. So we're diving into the fundamentals. We have fundamentals. Let's dive into the fundamentals. And after the fundamentals, I'll take some questions and we'll call it a wrap. Okay, so we take the economical calendar. Let me log in. The economical calendar has to do with the news, events that has high liquidity to drive the markets. Exactly. So on Monday, we have by 9 a.m. Europe, IFO business climate. This business climate has to do with what business individuals think about the current situation of the economy and how this current situation of the economy is going to impact their business. Are they optimistic that their business will make progress, or are they pessimistic that their business will die? So that is what this IFO business climate does. So tomorrow morning by 9 a.m. Nigerian time, we'll be getting the news. And if this news is positive, if we have about 92, currently 91 is lower than 91.1, which could be a driver that made Euro USD to go down. But by Monday, tomorrow, 901, we see 92. This would be a driver that will make Euro USD to go up, which is exactly what we need. We need this type of driver. So we're going to be patient, wait, get this news, see the structure of the market, and if it aligns with us, we take the buy. So set your alarms, be agile, and get ready for tomorrow. Then for Tuesday, we have Australia by 1:30 a.m. Nigerian time. Probably you'll be sleeping by then. If we see a buy setup before this news, because I can remember there was this period we placed a trade. There was not much liquidity in the market, but as soon as the news was announced, there was high liquidity, which pushed the market to our own direction. So the retail sales month over month has to do with the overall sales, retail sales of businesses in Australia at a particular region. So a higher than expected figure is meant to be positive for Australia, but 0.4% is lower than 1.9%, which could be a driver that made AUD USD to go short on Friday and on Thursday. So heading into Tuesday, we expect what this percentage to be higher. If we're going to get a 1% mark, if we get a 1% mark that is higher than 0.4, this could be a driver that will make AUD USD to go high and go up. So let us be very, very conscious of these fundamentals, because they come with liquidity and they drive the market. Also, something else you need to be mindful of is headlines during the trading day. Headlines during the trading day. I'm giving you guys all this juicy content because I want you guys to know that trading is not just all about price and charts. It's more about the economical factor, microeconomics. You can be in your country, but you know a lot about what's going on in every part of the world and how these particular effects or events can affect your business as a trader. So the next is USD. On that particular Tuesday, we have goods trade balance. Goods trade balance has to do with importation and exportation of goods within the United States of America. If the goods that is imported is higher than the goods that is exported, it is less. There's no trade balance. But if the good exported is higher than the goods imported, it is good for an economy. So that is what will show us that reading on Tuesday. So we'll be very watchful for that reading. And I think this reading could be negative, and then we can be able to push market to the upside. Since there's a lot of issues with the banking system, and this issue with banking system, liquidity is needed to carry out trade and trade balance. And with the job losses and so on that's going on in the United States of America, I just expect that this news is going to be a breather for them for that day. So for Wednesday, we have monthly CPI. This is CPI, which has to do with inflation. If inflation is increasing, it's bad for the economy, but if inflation is decreasing, it is good for the economy. So currently we can see 7.1% is lower than 7.4%, which is good for AUD for Wednesday. And if it is lower by Wednesday, good. We still have more push to the upside. Then GBP, about Euro, consumer confidence, what the consumers think about price and how they think about the economy. That's what this consumer confidence is all about. So if there is a positive, because minus 29 is better than minus 30.5. Think about it. When you add, you do 0 plus 1 plus 2 plus 3. When you go the inverse direction, 0 minus 1 minus 2 minus 3. So minus 30.5 is lower than minus 29. So if on Wednesday we get minus 28, which is going to be a positive increase for consumer confidence within the Euro zone, this is going to push Euro to the upside as well. So we are watching out Monday for the push in Euro, and also Wednesday for the continuation push, because I see that all these news, they align together to create much further liquidity within the market. You understand? So this can also push the market more than 60 pips, over 80 pips, 100 pips, just with this news accumulating and compiling. So the next is Bank of Australia Manufacturing PMI. This will also be announced. A higher than expected figure should be seen as positive for Euro. Then on Thursday we have, and on Wednesday I think we're going to have a live trading session. I'll announce this on Tuesday evening by 9 p.m. West African time. We'll be having a trading session before 7 a.m. I want us to trade this session on Wednesday before 7 a.m. This news, this consumer confidence. So you'll be getting the links to join these trading sessions in our group as well. Then on Thursday we have a lot of loaded news for Euro. But the issue with this news is that it doesn't have any consensus, so we don't have much data we're working with. So we're only going to be expecting what the actual, which has to do with news headlines. So you have two options on how to trade this type of market: either stay off the market, or what, put your market on break even, take a little bit of profit, or what, no loss at all. Because this type of fundamentals is very, very, very volatile, and it has to do with current events, speeches, and so on and so forth. So on Thursday we see that we have jobless claims, 4 weeks average, and I think this data is going to be low because there was about 19,000 job layoffs in the United States last week. So I think this jobless claims is going to increase, and when it increases, it's not good for the economy. I'm just saying there was 19,000 layoffs. It's all over the news. You watch any news at all, you see it. It's there. Then Friday, March 31st, that's the last day of the week. We have Euro retail sales. So this is higher than expected figure, should be seen as positive for Euro. Minus 5.6 is higher than minus 6.9. So we just have to choose this Euro, chef, Euro, a lot of news on Euro. So there'll be a lot of volatility on the Euro market, and this is going to drive investors' confidence, pushing the market to the upside. So this is what I have to say about the current fundamentals. We use this to trade the market cautiously. Don't over risk. Don't place trades without stop loss. Our advice: don't ever add to losing positions. Don't place trades without proper risk management. And if you would like to learn all this, learn how to handle this risk management, how to handle the right trading mindset, you can go to our website, get a package on how to trade the financial market. We have a monthly package, 3 months package, 6 months package, we have 1 year package. You're getting about 2,000% return of your investment, because the education you have there is education I paid about $500 to $700 to get, but you're just paying bits of pennies for it. The main objective of this is to give you the education that will give you what responsibility and control over your financial career when it comes to the forex market. So I want you to take hold of this opportunity and transform your life. It could be the only choice you need to make to start increasing your financial capacity. Thank you so much for being on today's forex trading forecast. Like you all know, my name is Anthony Phillips Njoku, and it's a pleasure to always share this valuable information with you. Have a wonderful trading week.